Welcome to episode 62 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring one stock, one headline, and one reason investors should care.
This week, as numerous ongoing wars, rising inflation, and Trump's chaos tactics continue to muddle global markets, investors may be struggling to intuit signals within the noise, prompting us to highlight a couple of recent investments by billionaire Eric Sprott, one of Canada's most successful mining investors, illuminating why his interest in these companies represents a green flag for your due diligence.
First up, junior miner MAX Power Mining Corp, ticker MAXX on the Canadian Securities Exchange and MAXXF on the OTC market in the US. The company has a 310 million Canadian dollar market cap. This past Thursday, Max Power announced that Mr. Sprott himself deployed a $25 million Canadian investment to accelerate the commercial advancement of Canada's first ever subsurface natural hydrogen system.
Okay, John, can you give us a rundown of this hydrogen system?
Right. Well, Max Power is a subsurface natural hydrogen system that involves drilling deep underground into rock formations where naturally occurring hydrogen gas has accumulated, much like oil or natural gas reservoirs. The goal is to extract this naturally occurring high purity hydrogen directly from the earth, potentially providing a low cost clean energy source without the need to manufacture hydrogen using electricity or fossil fuels.
Hydrogen, obviously popular among our audience, and Eric Sprott sees its potential, of course. So I must ask, how has Max's stock performance backed up all this hype?
Well, Max Power's growth has been nothing short of outstanding. Since this time last year, Max stock is up more than 1,000%. Since the year began, it's sitting more than 280% higher as of this recording, obviously. This jump isn't from like one single event either. It's a combination of speculative hype, legitimate catalysts, and macro trends. So let me explain. Max Power's stock surge is mainly driven by excitement around its first mover position in natural hydrogen, a new clean energy concept, combined with positive drilling results and exploration progress that suggest large potential discoveries. The rally's also been amplified by strong investor backing, including Eric Sprott, smart partnerships, and broader hype around clean energy and critical minerals. This turns it into a high momentum, speculative play.
Okay, let's get down to it, John. What drew Eric Sprott to this stock?
Well, if I get inside of his mind, I think Eric Sprott invested the $25 million because he sees Max Power's natural hydrogen project as a potentially world-changing energy opportunity, no short of hyperbole, with a large upside. And the investment is meant to accelerate drilling, also resource evaluation, and of course, commercialization efforts. So, in simple terms, Sprott is betting that Max Power could become the first company to commercialize a new scalable clean energy source. And the funding both validates the story and helps reduce execution risk going forward. Now, Trevor is going to tell you about another stock that caught Eric Sprott's investing eye, but this one isn't an up and coming resource, but a well-established, ever-gaining commodity.
That's right, John. My standout stock in Eric Sprott's portfolio is Honey Badger Silver, ticker TUF on the Venture Exchange, market cap 131 million Canadian, a North American silver and critical minerals mining company advancing untapped projects in metals-rich jurisdictions spanning the Yukon, Nunavut, and the Northwest Territories. Sprott currently owns about 10% of shares outstanding and recently made a just over $6 million investment in the company.
All right, so based on publicly available data, what's the reasonable assumption behind Sprott's conviction, Honey Badger?
Well, among the company's 8 high-quality Canadian silver projects, including numerous district-scale land positions in some of North America's most resource-rich jurisdictions, its flagship feasibility stage Prairie Creek asset in the Northwest Territories is probably what caught Sprott's attention. The project, purchased for only 12 million Canadian in cash and stock, hosts a historical resource of 240 million ounces of silver equivalent, measured in it and indicated, plus 167 million ounces inferred, combining for more than $27 billion US in the ground, which is more than 280 times larger than the company's current market capitalization. This gap is even higher when we consider that, portfolio-wide, Honey Badger's resources stand at about 550 million ounces of silver equivalent, making the company a significantly deep value opportunity with near-term re-rating potential. This is especially true when we consider that Prairie Creek benefits from an existing mill, underground workings, and a full set of permits to start processing ore today, and that its current estimated mine life of 20 years covers only 2.3 kilometers of the project's 16-kilometer strike length.
And what is the company up to in terms of, bolstering project value and improving market sentiment?
Honey Badger CEO and executive chairman Chad Williams, who is the top shareholder in the company at 15.7%, recently sat down with our very own Ricky Lee to discuss the potential for Prairie Creek to host germanium, a metal essential to fiber optics, infrared optics, and semiconductor technologies, whose price has doubled to more than $8,000 US per kilogram year over year. Early stage rock assay results yielded up to 316 parts per million germanium within the stratabound massive sulfide zone, which comprises around 10 to 15% of the total known tonnage at Prairie Creek, suggesting a potentially significant secondary endowment to the project's main silver, zinc, and lead resource. This sets a prospective tone for the months ahead, as Honey Badger resamples historic drill core using germanium assay techniques developed at the University of Toronto, with whom the company is collaborating, to better understand mineral distribution and enhance future exploration at the project. The company also plans to evaluate multiple occurrences on strike from the main deposit area that are prospective for both base metals and associated critical elements, including germanium.
Well, Trevor, all this development sounds very promising, but has the broader investing public recognized it in a meaningful way?
I'd say so, John. Having registered an 800% return year over year, I think it's safe to say there's buy in when it comes to Honey Badger's growth plans. And with silver appreciating by 129% year over year at the time of recording, and the metal's positive momentum expected to continue over the next few years, backed by forecasts from the likes of JP Morgan and Bank of America, investors benefit from a strong foundation for conviction in Honey Badger as it develops its assets into the future.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with MAX Power Mining Corp. And Honey Badger Silver Inc. and is intended for informational purposes only. For full disclaimer information, please visit stockhouse.com/legal/disclaimer.